Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.
Welcome to Stockwatch with me, Simon Brown, and joining me to unpack your stock-related questions today, Shalk, PSG Wealth Old Oak, David Shapiro, Sasfin Securities. Be sure to send your questions through via email to stockwatch@bdtv.co.za, SMS 41392, or on Twitter at BusinessDayTV, #Stockwatch. Gents, appreciate the time. David, I'm going to start with you. The whole world, including people who don't even know about the stock market, is waiting for, after US close tonight, Nvidia results. Scary.
Poor Jensen Wang. Yeah, it is scary. Jensen Wang's getting into the ring, and he's got to bounce around there. And the whole audience, everybody in the stadium who's watching this boxing game or match wants him to be knocked out. They're dying for him to be knocked out.
No,
So they
not
can
me,
say,
not me.
I told you so. Yeah, internet bubble. AI bubble. And this poor man, when he comes out with these results, he better make sure that every line on the, in the numbers beats expectations. Not only beats it by a big margin, because everybody's going to say, yeah, small beat, whatever it is. So he's on the line, and I'm a bit concerned that the market wants this to come down, wants it to fail, and I don't feel that way. I'm still very bullish on AI and what it'll do, but I can't fight the masses out there. And there's not, Skulk, whoever reads the media, whether you're the Financial Times, the Economist, Bloomberg's, you're watching CNBC, you're watching Business Day TV, everybody's saying AI bubble, it's going to burst. So we all geared up for this bubble bursting.
But hey, to be clear, Jensen Wang is worth $176 billion. I think he can do just fine. Skulk, but is it fair? Because as David says, there's certainly a negativity, and let's park that aside. But there is a sense that the entire AI story hinges on Nvidia, and they're an important player, but are they really that important?
Well, they're the most important player currently. If you look at who's dealing with who, and ultimately you end up with Nvidia currently. But it's just we will know tomorrow. I think the one thing that's interesting when you look at the option market is currently implying, if you look at them, they're implying that we're going to see a 7% move either or. So it's like David said. It's going to be either a beat and a proper beat. Then we might see a 7% movement, or miss, or just not as good, and it could be a 7% drop. David, you were talking about everybody want to be seeing them being knocked down. Now, what is knocked down? This is a company now that's way over $4 trillion.
Yeah.
Less than a year ago, we were high-fiving each other. One of the first companies that surpassed the $3 trillion mark, and 2022 it surpassed the $2 trillion mark. So even if it drops by 50%, we're only back to 2022's levels where we high-five each other saying, hey, this is one of the first $2 trillion companies. I think what is important to me when I look at Nvidia currently and how it's intertwined with different open AIs and the Microsoft, and how everything is just sort of intertwined, and now Nvidia sort of plays a very, very important part. What was interesting, I read an article. I'm not going to bore you guys with the whole article, but I read an article how significant Nvidia has become for the US economy.
Yes, yeah.
And how, like David said, they should be beating, and they should be properly beating, because eventually if we start seeing Nvidia really missing bad, this won't only be bad for Nvidia itself, Nvidia shareholders, the S&P 500, because currently as we sit here, it makes up close to 8% weight in the S&P 500, so that will be bad for the US market, but that will also be bad for the US economy. So Let's hope it continues. It's a nice one. Could this be a bubble? Yeah, for sure.
But I take your point in the economy.
Yeah,
More
for
importantly, if Nvidia falls 50%, I'm still in profit, and I was late to the party. So people like Brad Kamalo and David Shapiro, 50% wouldn't even be a flesh wound in their mind. But let's bring it back home. We got inflation data out earlier today, 3.6%. That's the highest since September of last year. Core was 3.1, which is a lot better. MPC tomorrow, Skalk, cut.
Okay, so let's use the intelligent people, because that's I'm not an economist, I'm not part of the economists. 88% of them are still saying that we're going to see a quarter percentage cut for tomorrow. So let's just get it out there. That's the consensus. I think it's sort of changed in two ways. Firstly, I think if you ask me, do I think we justify a drop in the interest rates? I would say for sure, without a doubt. I think our primary objective should now currently be economic growth. We should try and get unemployment down, etc., etc., etc. And that you do need the tools like cutting interest rates. That said, they've changed the playing field. They've changed the playing field this year or last month by saying the inflation target is now fixed 3%, and we can go 1% either or. So we can 4% or go 2%. But the fixed inflation target is 3%. And you just mentioned it. They were forecasting 3.1%, came out 3.6%, because this is now in the upper band of that 1% movement. So I think the SARB might think, oh, wait a minute, this could be a bit problematic. When you actually take it back to the US again, because I think South Africa is also just a small fish in a very, very large pond. And when you look at the biggest fish in that pond, namely the US, that's also changed. When you look at the CME Fed tool, they've now gone from close to 70% probability that we'll see a rate cut for the final meeting for this year, now to 54% unchanged. So I think the SARB might look at this and say, inflation a bit on the hotter side than expected. Plus, we're seeing the US now leaning towards staying unchanged for the latter part of 2025. Let's just sit it out. Try and make sure that inflation stays around about the 3% and do nothing. Do I think it's going to be a good choice? No, I don't. But hey, again, I started off, not the intelligent guy in the room.
David, where do you sit on cut? I mean, certainly I think that they should, but whether they will.
They should cut. They should. I was looking at Home Depot's results yesterday, which I find is a very telling company. And you get a very good indication about the health of the consumer. And they came out with results that disappointed. And one of the reasons, and when you listen to the commentary, people are not spending on big ticket items. They're holding back decisions. They're holding back on housing. And housing is a massive driver of economic growth, no matter where you look. And a lot of that is dictated by the long rate, not the short rate, the long rate, what's at the long end of the market. And when I looked at the Home Depot results, I said, Mr. Powell, you've got to bring rates down. I don't care what your argument is, because you need to stimulate the US economy. You need to get people to to buy housing. And I think I can translate that same argument here as well. Our long rates are so high. In fact, even our short rates are high. And you've got inflation at 3.6%. There's a massive margin that will allow you to cut, despite the fact that we've got a 3% target, and 3% every year, can cost consumers and savers and so on. So from my point of view, I think globally we've got to start bringing rates down and get global growth, back on its feet, get things going again. Yeah. So I'm hoping that it's more than 25 points, that there's a few concessions made, particularly ahead of November, Black Friday. I don't know whether it'll make it, whatever.
But I think the positive to a certain extent, Simon, is we've seen quite a large drop in the petrol price in November. So I think that could be a bit of a saving grace. When the SARB sits and say, well, I know we're sitting with 3.6%. That was October. That's after we've seen a slight increase in the petrol price. Petrol price came down. Oil price remained low and lower, since the beginning of November. maybe let's just look at that as a sort of a softening environment. Again, if that came close to the 3.1%, I think that would have been the case. I do think the SARB suddenly has got a different decision to make. Are they going to try and be hard and fast on that 3%? Then we might not see the 88% being right. I agree with David 100%. We should be stimulating. We should stimulate. We can't. I mean, we should be growing 3.5% to 4% per annum. That's what an emerging market like ourselves should be growing at. Not aiming for 1.5 or 1.6% for next year. That's just that's not growing.
No,
That's
1.8 from the
maintaining.
minister last week. No one wants a 1.8.
Exactly.
Let's move to some numbers. Southern Sun results, which they called a resilient performance. I did note in the commentary, October was their best occupancy since the 2010 World Cup. I suppose the G20 is helping in November as well. Skalk, thoughts on the numbers and Southern Sun itself?
Yeah, not one I'm really following. I mean, I know it's been a tough time for them during COVID. Rights issues, and looking at the results now, let's call it 5 years later, that is good. And yeah, 73% occupancy, like you mentioned, October. That's massive. I mean, that is really. I mean, to compare that you with the likes of the best case scenario in the World Cup in 2010, there must have been some reason other than G20. I don't know, but it does seem like things are recovering better and better. They seem to get the debt management under control again. So in general, short answer, it looked pretty stable.
David, can I get you excited about Southern Sun?
I was a bit disappointed in the numbers that they published. I thought because of improved sentiment here, G20 and so on, we'd see a much better, bottom line number. It appears flat, and I'm not sure how they're going to get that up. But I was expecting significantly higher than that, considering that we're seeing a lot of internal travel. They did moan about government not traveling anymore. I don't know what transient means. What are transient people? I thought everybody who goes to a hotel is transient, unless, the others who just rent a day room or something like that. But I mean, generally, generally people travel. So I'm not quite sure what they meant by that, but I just found it a bit flat, yeah.
David, a question came through. Any concerns about the Ackermans selling down their Pick and Pay stake? Do they know something we don't? They definitely do. They sit on the board. They know a lot. But I mean, they just, want to spend some time with their money.
They had to go to the bankers to raise money in order to follow their rights. And that's an expensive exercise. And I think they made a fairly decent profit on having followed their rights. And I can understand why they want to get rid of debt and bank a decent profit. I don't know whether it's relevant anymore. I think it's a public company. I don't think they've got much influence or as much influence as they used to have. So, to be honest, I'd be far happier if they never had influence and they did sell out and got a much broader holding. I still hold them responsible for where Pick and Pay is today. So I think a lot had to do with perhaps too much influence of the family.
Yeah.
So I don't think it's a big deal.
Yeah, and it was taking dividends when perhaps not the best idea. Skulk, we had Reinet results yesterday. Update. Is there anything left after they've exited the Pension Insurance Corp? Are they going to, your sense, are they going to wind it up? They've got a pile of cash. They're going to maybe do some deals.
Yeah, I mean, they actually mentioned it in this announcement. People were talking about, we now expect them to do deals. I mean, they've pretty much now wrapped up all the crown jewels, that BATS and now the PIC. It's a big transaction. It's sort of, I mean, it makes you think, is this where they're going to stop? Because sort of hint, nudge. I'm going to talk about Remgro a bit later, because that's to me is still the elephant in the room. You very much get a feeling like they're really wrapping up this Reinet. But as mentioned, they said they're not in too much of a rush to make any new investments. They did mention that they're going to be focusing on their current portfolio and but only time will tell. So yeah, what time will tell us? That's going to be the interesting one. But I mean, like the PICG is more or less 50% of their NAV, and that's with massive. I mean, now they're sitting with both these without both these counters. Interesting. I think it's sort of going to be interesting play to see what's next.
David, it's a bit of an end of an era.
Yeah, it is. I don't even know what they're going to do with the money. I look at Buffett. Buffett's got $360 billion, and to do something with, I don't know, what is this, a few $1 billion? What can you do with that in an environment, in a fighting against all private equity companies? And I don't think the options are that great. They should just buy another portfolio and have a listed vehicle again. I don't know whether there's really much they can do with it. Especially I'm being a bit cynical, but this is not big money relative to what is floating around the economy.
Yeah, big for you and I, but not big for the rest of the world. Or Jensen Wang, as we said earlier, who's got like that proper lots of money. Question came through around Life Healthcare. The update didn't look so bad. The market seems to think otherwise. Patient bed nights were certainly up. Revenues was up. I mean, David, I always kind of look at the healthcare stocks quasi sort of hotel, because patient bed nights, and and this isn't holiday, right? Your doctor tells you you're going to hospital, and you go to a hospital. Your thoughts on it? I mean, it's been what's left of the sector. It's been a tough space.
It is. I don't know if you can make money in healthcare here anymore. I look at life and Netcare. There's not much left. We're going to get Shalk talking about what's a Mediclinic. He'll be able to tell us a lot more than we can. There might be something left there. That might be the way to go, is through Remgro. But it doesn't excite me. And also, health is you don't want profits to go up. It just means more people are getting sick. So
I suppose there's that.
But I think everything is in this update. I mean, when your update says our revenue is going to be up anything 5.56%, and when they told you that the tariff increased by 5.1%, that's it. I mean, they actually just grown by whatever they've decided to increase the tariffs with. And the other thing was interesting by reading both Life Healthcare and Sun International, 69% occupancy in the hospitals and 70-odd% in Sun International. This means people are gambling more than going to hospitals now. clearly the case.
That does in many ways kind of sum us up. Skalk, what about the momentum? Again, it was an update. They're growing. Where are they finding this business? Always is what I scratch my head about.
Yeah, David, you actually had a great explanation the other day on when we talked about these investment life insurance companies. And it's a tough market. It's sort of cannibalism, if you so to speak. It's not. We're not sitting with a retail market or a market that is growing, because our economy is not growing. If you look at our unemployment rate versus 10 years ago, we've got a higher unemployment rate, and this is the market a momentum doubles in. That said, I really thought that they do seem to be focused. They did grow, meaning that they clearly took some business from some of the other. And they're mentioning, and usually I like to skip all the way to the bottom where they talk about the outlook. And they're talking about a outlook or ROE, return on equity, forecast of 20% and higher. So that's going to be a tough call. But if they reach that, that could be good. That could be good for them.
David, they're stealing from somebody, I imagine, because this is a zero growth economy.
I need to go through this in a bit more detail. I haven't gone through them. I like Jeanette Marais. I like what they've done. They've turned it around. She's become, I've always said this was the ugly sister of the insurance industry, but suddenly they're starting to look a lot prettier. And
with Jeanette, actually.
Is she? I don't know.
With Jeanette. Because you called them the ugly sister. And Jeanette, that's definitely not you. We know that.
But when you looked at Sanlam, when you looked at Discovery, new business slowing down, falling. So that's why I've got to have a much closer look at this. If they can increase new business, that's a very positive element for the company. But I like momentum, and I like where they are.
Yeah.
I don't know the metropolitan side. That seems to be kind of battling a little bit. But anyway, for the meantime, I still like this business. But I need to look at these results a little more carefully.
And the question came through around Telkom. Telkom results been a winner, but the share price not much second half of the year. Is it worth continuing to hold? David, would you hang on to Telkom? I mean, this is back to being a plus 50 rand stock.
Yeah, I must admit, I was pleasantly surprised at what new management has done. I've always been worried about the legacy issues and how this is dragged down, but those seem to be vanishing. But, credit to them. They've changed their model and are doing well. I don't like the industry. I still think it's much too competitive. And as quick as you get customers, so you can lose them on price. So it's not an area that I'm too enthusiastic about. But going through the results, I must say I was pleasantly surprised.
Skalk, for you, I mean, it has been. I mean, I remember when it first came on, and of course it owned Vodacom and etc., and then it went through its troubling times, but it's looking a lot better and had a good couple of years.
That's hitting the nail exactly on its head. I mean, when I read through these results, and there was quite a few gold nuggets I found in it, and I'll talk about them in a second. But I think the one thing then when I finished reading this is showing us as South Africans that government entities can run successful as private companies. They can make the transition, because that's the one thing that I've seen. Suddenly, Telkom it's struggled. Make no mistake. I think if we sat here a year or two ago, I would have told you, wow, they're still struggling. But you can see they're reinventing themselves. Little things like most of these cell phone companies, MTNs, Vodacoms, those companies like to focus on contracts. It's sort of annuity income. It's a contract. Telkom went out and said, no, they're actually going to go focus on this pay-as-you-go type of contracts. And they've used AI to try and get the right positioning for these data contracts, and it's done phenomenal for them. They've really shown some solid growth in that regard. Just showing you again, I think they did reinvent themselves, and now in that area, a force to be reckoned with. Argument can still be: don't we maybe have too many providers in a small country like South Africa? Because we've got Cell C also now doing a listing, and I know that question is going to pop up somewhere along the line. Do we see people following the Cell C? MTN, Vodacom, Cell C, Telkom, Reinet. I mean, there's a lot of providers in a tough market environment. I don't know. It's a difficult
and we look at America. I mean, they've had consolidation. They've only got 3 majors left after one of them got taken up. Let's go to some stock picks. Skalk, Remgro.
Yeah. Okay. What David, you said last week, this one comes with a bit of a health warning, and the health warning is not Remgro, because it's still one of my most liked stocks. Came through a period now for the past 2 weeks where we've seen most of, let's call it the major fund managers, African, and the one golden thread that came through out of most of them is how they're still positive on South African companies, more specifically SA Inc. companies. So the moment I look at SA Inc. companies, I do think that Remgro is one of those companies where you can, it's like the mentioned shampoo, the 2-in-1. You buy one share and you get Mediclinic, you get Outsurance, Discovery, First Rand, you get so many other companies. Plus, I've told you 2 weeks ago, I mean, my favorite word is free. My second favorite word is discount. This company is currently, as we sit here, trading at a 40% discount to its intrinsic value. Prior to, let's call it pre-COVID, we're trading at a less than a 20% discount. Do I think that it will go back to the 20% discount? No, I think it will take time. But as I mentioned earlier, this Reinet play is an interesting one. They've got the same, let's call it, main players behind them. Mm-hmm. This could just be something to have a look at. If somebody like Reinet went and said they unbundled all the main crown jewels to unlock value for shareholders, just watch Remgro as well.
Okay, we'll keep an eye on it. David, RSA long bonds.
Yeah. We were talking about inflation. You can still get those 2040s at, they were 11.5% clean yield. In other words, that's the yield you get. I think it's down to about 9.5%. At 9.5% with inflation at 3.6%, I can live with that. And this will take you right through to 2040. You don't have to do anything. You can just sit back and get 9.6%. Yeah, inflation might take a little bit away of this purchasing power, but this is tradable, and that I still think it's one of the most attractive areas of our market are still the long side of the bonds. Yeah, it's a bit short. Your short dated, your 10 years are now fallen below 8, I think, or below 9. Nah, so you can extend it a little bit. Don't be worried about holding bonds and that. They're tradable, can get out, and if the rates do come down, you make a little bit of a capital profit there as well.
Yeah,
still attractive.
And a 6% real yield is real, is absolutely in a 3% inflation environment. That's all for Stockwatch today. Thanks to our guests, Shalk, Louw, PSG Wealth Old Oak, David Shapiro, Sasfin Securities. Up next, the close.
Stockwatch is brought to you by Merchant West. Where others stop, we push further. Because we believe business as usual doesn't lead anywhere new. Go beyond with Merchant West. Finance, invest, insure.